That will pave the way for a very large influx of capital. 1% seems more likely. That'd be 300 billion. 300 billion on 100 billion of free float, price goes up a lot. 30 trillion with a T, 30 trillion. Remember, 1 trillion is $1 every second for 31,710 years. And so 30 billion on 100, that'll move the price.
Morgan Creek Capital's Mark Yusko gives us his update for the crypto market and why we're going to see a massive $300 billion pour into Bitcoin in the coming months. Yusko explains that while speculators initially drive price movements, giants like BlackRock have entered the market and shifted the cycle by pushing prices beyond fair value, resulting in the crashes we've seen. He also points out that historical trends indicate a parabolic increase in market cap in the coming months, as we near the Bitcoin halving in March of 2024. With real money now flowing in, Yusko emphasizes that the crypto market has become more significant than ever, and institutional investors are driving the price of cryptocurrency in such a way that even 1 to 3% of a portfolio will have massive gains in the next 6 months. Let's get right into the latest interview with Mark Yusko, as he gives his prediction for Bitcoin and the crypto market in the last quarter of 2023. Also, we have just partnered with our friends over at Jamie Tree Finance, who have just launched a daily 5-minute crypto newsletter. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free. So to give out as much value to you as possible, we're sending out a 5-minute daily newsletter which will cover expert predictions, breakdowns of on-chain crypto data, and any breaking news that you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
I believe the ETF will be approved sometime around year end, whether it's in early January or December, sometime in that time frame. That will pave the way for a very large influx of capital. I know you've had Eric on the show about Tunis, and he does this great work, right? I mean, there's 30 trillion with a T, 30 trillion. Remember, 1 trillion is $1 every second for 31,710 years. But 30 trillion is going to come into, or that's the total amount of money managed by RIAs and others that is not allowed at this point, for whatever silly reason, to own Bitcoin. And they can't own GBTC and they can't own Bitcoin miners, and they've called a timeout. Well, once there's an ETF, particularly if it's an ETF that BlackRock runs, there's going to be no excuse, and they're all going to have to approve it. Their clients have been asking for it. I would say I have a Family Harmony account at UBS. They won't let me own anything related to, like, why? It's my money.
Right.
You should let me buy what I want to buy. And they're like, no. So I think all that goes away. And I think Eric's number is, let's say 1/10 of 1% comes in. That's 30 billion. Well, but wait, 30 billion on 500 billion, that's not that much. Well, no, it's not 500 billion. 400 billion of the 500 billion of Bitcoin's market cap doesn't really trade. It's either locked up like the Satoshi wallet or the Winklevoss wallet. It's only about 100 billion that is the free float, to borrow a TradFi term. And so 30 billion on 100, that'll move the price.
Yeah,
but
for sure.
I don't think it's going to be 10 basis points. I think it's 1%. I think you have to do 1%. As a fiduciary, if you got, 50% in equities at some of the highest valuations in history, and you got, another 30% in bonds, which have had the first 2 negative years in the history of the bond market, 140 years of history, 2 negative years, looking pretty ugly. And you got this asset that is the best performing asset again. 11 of the 14 years that Bitcoin has been alive, it's been the best performing asset of all assets. It's the best performing asset again this year. I think 150 billion would be 0.5%, right? Instead of 10 basis points. And it looks like he's updated his thoughts. I'll go further and say 1% seems more likely. That'd be 300 billion. 300 billion on 100 billion of free float, price goes up a lot. And here's the interesting thing, Paul, is the way halvings work is the fair value increases. So we've got a tailwind that the fair value today, based on Metcalfe's law model that Tim Peterson runs and that I think is fantastic, says that the fair value is somewhere in the low 50s, 52, 53, let's just call it 50. So at the halving, fair value doubles. What do you mean, Mark? What are you talking about? Well, think about it. The miners who secure the network, their costs are fixed, mining machines and electricity. So if their block rewards, the number of rewards that they're paid to secure the network, gets cut in half and the price doesn't move, then they're out of business. So there's a built-in mechanism to move the price higher, which is actually really interesting because that attracts attention because there's movement. And so, long story short, fair value, every halving has added a zero. So we went from 100 to 1,000. Then we went from 1,000 to 10,000. Now we go from 10,000 to 100,000. So if fair value is 100,000 and we're trading at 26, it's a pretty rapid increase to fair value, I think, as investors buy things that are below fair value. But then what happens in the fall, post-halving, you get this parabolic blow off top. And in the previous cycle, fair value was around 30K. We got all the way to 69.
Right.
That was because there was too much leverage and too much gambling and speculating. I don't think we go 2x this time or 2.5x this time. Could we get 1.5x? Sure. That gives about 150K, something like that.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Yusko asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment. With a giant spotlight on Bitcoin ETFs, Yusko highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
I've been saying this for 5 years. My hashtag #GetOffZero is the wrong number, right? This is a truly unique, diversifying asset that must be in everyone's portfolio, okay? It doesn't have to be your whole portfolio. I never said that. It should be at least 1%. I'll argue 2 or 3%, but 1%'s fine. And had you done that a decade ago, okay, had you taken 1%, half from stocks, half from bonds, 1%, put it in Bitcoin, your portfolio would have done two things. It would have compounded at about 250 basis points per year better with less volatility. So it reduces risk and adds return. It's the perfect diversifying asset because it's 0.0 correlated to bonds and 0.15 correlated to stocks. And look, Markowitz won the Nobel Prize for a reason. CAPM works. When you add diversifying assets with reasonable levels of volatility or even high levels of volatility, if they're highly uncorrelated, your portfolio becomes more efficient. And so as a fiduciary, you can't not have this asset, particularly if now there's a ETF by a trusted brand. Many of them have abdicated that day-to-day responsibility to their financial advisor in a good way, right? Most people shouldn't manage their own money. I don't mean it's a bad thing. It's just that's not their specialty, right? They're nurses or construction workers or financial managers or whatever it is. That's not your day-to-day thing. And it didn't used to be that way, right? In the good old days, you worked for a company and you had a pension and they had a professional manager that took care of the money and you got a defined benefit for the rest of your life. And then they snookered us by saying, hey, we're going to change the rules and we're going to make it portable and defined contribution. Well, that was just a gift to corporations because they had to spend 30% less to fund their obligation, went straight to their bottom line and into the manager's pockets. And they thrust that responsibility on the individual. The average individual doesn't spend the time or have the knowledge to manage their portfolio. And it's not a criticism, right? I'm not a great chef. I shouldn't try to cook my oown food. I just, that's not my expertise.
Sure.
I should go take advantage of other people's expertise. I am a financial manager. I take care of people's assets. So I do think that the average investor will be very well served by having a good RIA, registered investment advisor, a good financial advisor, who will say, I gotta put 1%.
Yeah, let's go that direction.
Again, that's not even a big number. If we got 2 or 3%, Katie bar the door.
Yusko anticipates that the crypto summer will continue its scorching run until June of the following year. As we stand on the precipice of fall 2023, merely a month away, the crypto market is poised for a meteoric surge in prices. He illustrates Bitcoin's current undervaluation, drawing in investors and enticing speculators eager to ride the waves of September's price fluctuations in pursuit of profits. Yusko's outlook is fueled by the impending wave of mass adoption, which he believes presents an unparalleled opportunity to get in on the action. He sees the race toward a six-figure price target set to unfold in just under a year. What's more, he highlights the intriguing historical pattern of Bitcoin's value surging 10x with each halving event, hinting that 2024 could catapult Bitcoin from $10,000 to an unbelievable $100,000. What do you think about Mark Yusko's prediction for Bitcoin, the crypto market cap, as well as the institutional capital pouring into the space? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.